The US dollar rose to a 6-month high, and all three indices, although rising on Friday, are on track for steep weekly declines amid worries over stretched tech valuations and declining December Fed rate cut expectations. Not even forecast-beating numbers from Nvidia managed to stem the tech-led sell-off. But what should we be watching next week? Well, to talk us through this, I'm joined by Head of Global Content, John Kicklighter. Thank you for joining us, John.
Thanks for having me.
So there appears to be a lot for the market to be weighing up, not just in the US, but also in Japan. What are the general market conditions we should expect to deal with next week, and which markets are you watching?
So when you approach the North or South Pole, your compass tends to go crazy. And I think that's kind of what we're going to be facing going into this coming week, because we have the pickup in volatility, which we somewhat lacked for the past weeks and maybe even months. But then that slow turn in direction is getting more and more traction on the risk-oriented trades. So benchmarks like the S&P 500 or the Dow actually taking out their 50-day moving averages, actually the S&P 500 ending a very long stretch above that 50-day moving average, and breaking very distinct trend channels for the technical analysis watchers. So this is a slow but measured and tangible change in that dominant bull trend. And that's probably going to raise some concern with a lot of investors who were so used to bad news being ignored and good news lifting us up a little bit. But the critical lack of consideration here is going to be the participation or the open interest, because we're heading into a week that is very well known for draining liquidity, because in the United States we have the Thanksgiving holiday, which will take one of the major centers of financial activity offline on Thursday, and historically we see that pretty consistent through Friday. So that gap in liquidity is like a fire break. It prevents any kind of serious sell-offs, that is more the risk off, from really taking traction. And if it turns back into a bullish risk on, it's probably going to just lack for momentum. So that's going to be where we're facing this greater interest in technicals. I think I see a lot more headlines actually focusing on technical analysis, where usually they ignore it outright. We also see fundamental themes are rife across the board, including that disappointment in Nvidia earnings, which you talked about. Not that it was under expectations, but more so a lot more skepticism. We also see the hope of a Fed rate cut in December dropping off. We see economic activity forecasts starting to soften as U.S. data starts to come across the wires. And then we have situations like what we're seeing in Japan, where concerns over stimulus and where yields are going has reversed some of the capital flows that we've seen there. So all of these are consideration for feeding risk aversion, if there is that appetite for risk aversion. But we don't know if we're going to be able to keep that head of momentum building with that known liquidity gap. So in terms of markets to be watching, I'm going to be watching the S&P 500. I'm going to be watching Nvidia. These are the top players in the risk-oriented trade. But then also, by equal measure, I think it's very interesting to watch Bitcoin as the outlier, truly speculative-oriented product. The dollar index, and even pairs like the dollar yen or euro USD. The dollar yen is particularly interesting, and I think there's good provision to be watching also Japanese yields, like the Japanese 30-year yield and the Nikkei 225.
And then turning our attention to themes, what are the most potent themes that we should be watching out for?
So the themes are very diverse, but they're not particularly potent. And the problem is that we're lacking for that next stage to keep the fires burning. So we have obviously this interest in the Fed's rate decision in December. Well, the problem being now is that with the rescheduled delayed inflation figure, so CPI, we're not going to get a CPI reading before that rate decision. So it's going to be very difficult for the Fed to really weigh in, but also the market to speculate on that. So that's a theme that's without that next step, that next milestone. We don't really have a whole lot of growth figures. So outside of the PMIs that we got today, there's not that critical traction between now and through the end of the year. So it's kind of an open-ended, broadly diverse speculative view. And these markets and these market participants don't seem to be very aligned in what their expectations are for growth. Earnings is past. So really what we are looking for, or what I'm looking for in terms of what can move the markets, is the unknown, unfortunately. So if you want to call it a black or a gray swan, I'd be more concerned about something along those lines. So that story out of Japan, although I think it is a little bit exaggerated in terms of, I see stories about the reverse of carry and how that's a leverage trade and that can be a financial crisis. I think that's way over exaggerated, but at the same time, if it is taking up more and more of the market's focus, it could turn into a touch point that is more of a concern. So looking for headlines, unfortunately, rather than truly through scheduled event risk, and seeing what events are going to actually impact the market. So what news is perhaps bad, and does it actually take traction towards risk aversion, or does the market totally ignore it? Or on the opposite end, is good news not going to garner traction, or does it actually see a pullback? And so that's kind of what I'll be looking for in terms of the cadence and themes. Themes, unfortunately, are probably not going to be a known quantity going into next week.
And you briefly touched there on event risk, but what is the top event risk that you'll be watching out for?
We will really be struggling for a definitive, very impressive event to really hitch our cart to. Monday is all but empty. I mean, you have things like the German and the Brazilian business and consumer confidence figures. You have the Chicago Fed's National Activity Index, which are interesting for me as kind of a events risk wonk, but it's not going to be particularly potent for market movement. Tuesday, we get into some U.S. event risk, so perhaps the last big U.S. event risk update of the week, and that's going to be including the weekly ADP figures. So we just had the non-farm payrolls come out better than expected, and this is really one of our last vestiges of insights that we're going to before that rate decision. So watching those weekly figures. U.S. PPI supposedly is going to be coming out, so the factory inflation figure, but really I'll be watching that conference board consumer confidence. And again, confidence from the consumer, the largest component of GDP, is your best sense of getting a expectation for spending, inflation expectations, which can turn into reality. Wednesday, it's more diverse. I'll be looking for the RBNZ rate decision, expect to be a 25 basis point rate cut. So if you're out in the APAC region, watch that. There's going to be an auction of 40-year JGBs, or Japanese government bonds, which will be interesting in the context of this uncertainty around Japan and stimulus. In the UK, we have the autumn budget, which is going to be certainly a major event risk. We had that mini budget crisis not long ago, if you've been trading and you were watching the sterling. So there's going to be expectations for, or at least some concern about the volatility that can come after that. And then we have durable goods out of the United States in the Beige Book, which is the precursor to the 2-week countdown to the next Fed rate decision. Thursday is going to be Thanksgiving, and that's going to significantly curb any kind of impact that we have from event risk. So even though we have things like Chinese industrial production, or we have Eurozone economic confidence, or we have jobs figures from Japan, or Tokyo CPI or industrial production from Japan, those are really going to struggle for traction, even if it is in the context of a more interesting thematic focus. We do need to put that into consideration, and liquidity and open interest in market conditions are a precursor to the effectiveness of event risk or even technical analysis. So always put that in context. And then Friday, still in the aftermath of the Thanksgiving liquidity drain, I'll be watching something like German jobs and CPI, or India and Canada GDP. And then, of course, we'll have the expectations of Black Friday. And I looked over the past 10 years of Black Friday's impact on market through the S&P 500. And there's only one standout, and that was the 2.3% decline that was in 2021. And it was related to the evolution of the pandemic and an Omicron variant, which we are not amidst that uncertainty. So a very low probability of significant volatility, unless, again, a gray swan.
Well, thank you very much for your insights once again, John.
Thank you.
For more videos like this, please do like and subscribe.